Moneycontrol has been running a special series on ITR filing to assist taxpayers to complete the exercise on time with minimum hassles. Here's a quick summary of the most frequently asked questions and their answers. Do I need to file income tax returns? In certain cases, it's mandatory. For example, if your income exceeds the basic tax exemption limit, which is 2.5 lakhs for those under 60 years of age, for those between 60 and 80 years of age, this threshold is 3 lakhs. For very senior citizens above 80 years of age, the basic exemption limit is 5 lakhs. Irrespective of your taxable income, however, you also have to file returns if your foreign travel expenses in a financial year have exceeded 2 lakhs or your electricity bill amount has crossed 1 lakh. Similar is the case if you have foreign income and assets. Those depositing over 50 lakhs in savings bank account and 1 crore or more in current accounts too need to file returns. While it's mandatory to file ITR in such cases, you could benefit by completing the process even if these conditions are not applicable to you. For instance, the only way to reclaim refund of excess taxes paid as TDS is by filing ITR on time. So you must file your returns if you have missed submitting proofs to your employer for claiming deductions under ATC, ATD and so on in January or February. Why is it important to select the right ITR form? Simply because filing a wrong ITR form will result in your returns being rendered invalid. So how do you select the right form? Out of the 7 ITR forms notified by the CBDT, ITR 1 to ITR 4 are the ones applicable to individual taxpayers. Make sure you pick the right one that fits your criteria. What to do if you forgot to submit investment proofs to your employer in January? Can you claim these deductions while filing returns? Yes, many employees fail to meet the deadline for submitting tax-saving investment proofs. As a result, a higher amount of tax is deducted from the salary during the last 3 months of the financial year. If you miss submitting the proofs, you can enter the details in your tax return form and claim such deductions and tax refund for the excess tax deducted. What are the most common errors made while filing ITR? Minor errors made when filing ITR can result in your return being considered invalid. These errors could be as simple as not choosing the right assessment year. Remember, you will be filing ITR for the financial year 2021 to 22 and therefore the assessment year will be 22 to 23. Check your bank account details in the ITR form thoroughly. Entering this information incorrectly could lead to a delay in getting your tax refund. Also, like many Indian employees, if you switch jobs during 2021 to 22, do not forget to declare the salary paid by your previous employer. What if you forget to disclose some income that you earned? Some taxpayers forget to disclose certain incomes even if unintentionally. This is the case particularly with salaried individuals who rely solely on their Form 16, which does not contain details of capital gains or fixed or savings deposit interest incomes, for instance. While the detailed annual information statement that collates your financial transactions could prevent such mistakes, you need to be careful. If the income tax department detects this missing income, you could end up getting a notice. Do I need to complete the verification process after filing returns? Yes, this step is mandatory. Return filing won't be considered complete until you verify the returns. You have to complete this process within 120 days of having filed your ITR. It's best to opt for e-verification. You can use Aadhaar OTP, your internet banking account, or your pre-validated bank or demat account to generate an electronic verification code to complete the process immediately after submitting your returns. You can of course take the physical route too, but the process is time-consuming. You'll have to download the ITRV or acknowledgement form and send it physically to the Income Tax Department CPC office in Bengaluru.